help us understand the yin and the yang here. On one side, you have Janet Yellen, who seems to have a critical view of cryptocurrency and Bitcoin in particular, probably in line, by the way, with where Steven Mnuchin, the former Treasury Secretary, was. On the other hand, you have Gary Gensler coming in to run the SEC, somebody who's been teaching about cryptocurrencies at MIT. What do you think the upshot's going to be?
Yeah, it's a great question. And look, Gary and I testified in front of the House Financial Services Committee about a year and a half ago on this very topic. I think he and I share similar views. Look, Bitcoin has been a part of the U.S. financial system for the last 5 years now. At our firm CoinShares, we've seen a lot of interest in Bitcoin this year. We're really looking at three things. Sentiment is more positive than ever. BlackRock filed last week to add Bitcoin exposure to 2 of their funds. There are rumors that Bridgewater might be publishing some research on Bitcoin this week. So we're seeing a drastic shift in sentiment when it comes to asset managers. Market structure is changing. The CME Bitcoin futures hit their all-time high in open interest in December. We're seeing record activity on that contract in January. Right. So there's a lot of activity
I hear
in Bitcoin.
You on all the advertisements for Bitcoin. I'm not against
Sure.
Bitcoin, but you're advertising Bitcoin now, and you're in the Bitcoin business, so you have a good reason to advertise it. The question
Sure,
I'm asking is a very different one, which is...
I hear you. On the regulation side, look,
okay.
Bitcoin's been regulated. It's regulated by this. Markets are regulated by the CFTC. The SEC oversees any products that contain Bitcoin. So Bitcoin is already part of the regulated market. And again, Janet Yellen's comments, if you look, she provided written responses to her testimony. And in her written response on Bitcoin, she was much more nuanced. Bitcoin is regulated. It's a common misperception that it's not. So I just want to dispel that myth. More regulation is coming. More coordination between agencies is coming. And I think that's all very positive. So hopefully that answers the question.
Well, unfortunately, it doesn't, because I think that the thing that I'm trying to get at is whether you believe ultimately there is a way to actually have an anti-money laundering feature that actually works in and around Bitcoin in the same way that our current monetary system is able to, or the banking system rather, has ALM built into it. I would argue to you that Bitcoin is the opposite on purpose, and actually that it's almost impossible to get to that kind of standard. Do you disagree?
I disagree. When you and I exchange a dollar, if I handed you a dollar or a pile of dollar bills right now, there's no AML KYC on that. The majority of Bitcoin activity today in the United States happens on regulated platforms like Coinbase, which is about to IPO, and a number of others. They go through the same KYC, AML, FATF reporting procedures that any other bank or financial services firm does. So I think, again, when concerns come to money laundering, regulated venues exist. They're the on and off ramps here in the United States, and they are being regulated. So again, cash has the same function. We're not regulating cash.
Mel, but here's the distinction. For me to carry $1 million of cash somewhere would be a bit of a feat in that it has to physically be carried there. We're talking when you're trading Bitcoin, we're talking about something that can be done obviously in not even half a second. And so the real question is, to me, the idea of comparing cash in this regard to Bitcoin is an unfair issue. The other piece of it is you do have these unregulated wallets. That is the major difference, and it's unregulated at very, very high numbers, meaning that you can transact millions of dollars at a time, whereas if you were trying to do that with cash, it would actually be challenging and therefore be harder, and as a result make it easier for regulators to get on top of it.
But look, if we look at financial fraud, the number one place financial fraud happens is within the banking sector. Just look at the settlements that happened last year.
Obviously, because there's only one. Hold on. Can I say the argument that it happens with cash is ridiculous because it is the biggest market. So let's put that to the side. I can't even have that discussion in reality. What I'm asking you is a different question, which is,
sure.
Go ahead.
But look, at the end of the day, right, if people have a specific need, in this case, if there's a need to move large amounts of money outside of the banking system, it doesn't matter if it's Bitcoin or gift cards or fine art or collectible coins or watches, art, you name it, people are going to find a way to do it. Bitcoin is just a tool like any other asset that we have. It is just a tool. There are a lot of people using it for legitimate purposes. I do believe it's an asset class. When it comes to people using it for nefarious purposes, every financial market in the world, every asset in the world faces this challenge.
Right.
I struggle to see how Bitcoin is fundamentally different. I do think we will find pragmatic solutions. So I'm optimistic.
Shepard Smith here. Thanks for watching CNBC on YouTube.